The gold-silver mine ratio is now 7-1. How to profit from the gold-silver ratio.
Gold-silver ratio, and does it have any meaning?
Yeah.
So from the long-term perspective, from the 13th century up through the last 100 years, the ratio has been 16-1 or lower. So it's only been in the last 100 years where it's been above 16-1. And it's been as high as 100-1 a couple of times. So
and there's a reason for that. Can I interject? Yeah. The ratio, according to the U.S. Geological Survey, I believe the ratio in the Earth's crust is about 17-1, but the mineable supplies are much lower than that, now about 9-1. And so silver should be 1/9 the price of gold, not 1/75 or whatever. And
9-1.
well, that's the mineable supplies. Silver being a byproduct, there's a lot of it that comes to market much more cheaply. Being a byproduct, the cost on mining that is pretty much nothing. You're going after something else and you accidentally wind up with silver. Primary silver producers, there's not many of them. This is Dave's area, so you go ahead. I just wanted to interject the old gold-silver ratios were basically you would dig up money, and these two monies would be circulating side by side, bidding on goods and services, and this was something called the price discovery mechanism, not only setting the price of those goods, the free market setting prices of goods measured in gold and silver, but setting the value of gold and silver against each other based on the quantity in circulation. So it was that simple. If the gold-silver ratio was 16, well, that's a government-mandated ratio. If it was 12 or 15 or whatever it was, then that meant that in that area there was probably 12 times more silver. There was a period in ancient Egypt where I guess they were about the same, right?
5-1.
Okay, 5-1.
Dr.
Okay.
Green, probably the best research.
And in China at one point it was 4-1. So there were four times more silver floating around than gold, basically. So it was just based on the quantity in circulation. Go ahead and finish your story now.
So anyway,
brought
it's
them
only
up
been the
to
last 100 years. So during our lifetime, certainly it's mattered. But the natural ratio is right now about 9-1. And so I think silver is very undervalued relative to gold. And I think that right now, Jeff Christian did his presentation yesterday, which I watched. If you take all the world's assets, which means all the bonds, all the stocks, all the ETFs, everything you can invest in, insurance policies, all that stuff, no real estate. 1% of the world's money is in physical gold. 0.02% is in physical silver. So if 0.04% of the world's population buys physical silver, that doubled the market. That's how small it is. And as things get worse and worse, we will see more people that strive for something that they can have confidence in. It's a big con game. And when the confidence is lost more and more, it's a global phenomenon, which Mike points out all the time, and it's true. We saw gold go from 300 to 850 in a matter of about 8 weeks in 1979 to January 21st, 1980. And that was a U.S.-only phenomenon when people got scared the dollar was going to fail. Think of what will happen when the world thinks the dollar is going to fail.
Yeah, back then, there was no market in Russia, China. More than half the world was shut out from being able to buy precious metals. If they did, it didn't affect the price. There was no exchange in Russia or China, and now everybody can buy it. So it really is this. In this, you hear people say it's really different this time. For gold and silver, it really is different this time.
And hear from First Majestic Silver's own Keith Neumeyer, who says that the mining ratio is closer to 7-1 now, while trading at 85-1. Then what happens? My triple-digit silver prediction is based on production and demand. Simple. Consumption is growing rapidly, mine production is flat to down, no hoards left. Where is the supply coming from? And this is my argument as well. Everything I look at silver is based on production, demand, supply. It's very simple. And I've done a video about how much silver is needed in this energy transition, what's happening with mine production, so supply of new silver coming onto the market, and the demand for it growing from an industrial sense, but also from a monetary or investment sense. And for me, it's like an asymmetric trade. And so I'm with Keith, and I've done a video on this regarding triple-digit silver, where I believe we'll see triple-digit silver based on the fundamentals, not based on any whatever, and I've been pretty honest about where I think silver is going on this channel for a long, long time. I don't think it's going to the 2,000, 5,000, 10,000, whatever scenario plays out. If it does, we're in hyperinflation. And I mean hyperinflation. And we all feel pain in that scenario. But I see $100 silver, triple-digit silver, based on the fundamentals in a normal economic environment, not a hyperinflationary environment. So what I want to do now is share with you guys a short little video about how to trade the gold-silver ratio. Now, the video is a couple of years old, so forget about the price of gold and the price of silver that's on there. It's more the content about trading the gold-silver ratio. What we'll do at the end of that, I'll share with you guys how I look at the gold-silver ratio and whether I trade it or not and what I do with it.
Given the rise of precious metal prices during the summer, there was a lot of talk about the gold-silver ratio, but what does this actually mean and how can traders use it to try and profit? Hello, I'm David Jones from Capital.com and I thought we'd take a quick look at the gold-silver ratio. We saw a lot of activity in precious metals, strong moves by gold and silver this year, and some talk about this gold-silver ratio being at important historical levels. But what actually is the ratio, and how can we use it if we're an investor or a trader? I'm going to talk about this in a second, but first of all, let's just have a very quick catch-up with what was going on with gold and silver over recent months. Just one thing, of course, if you're watching the video and you haven't subscribed, click on subscribe down there, support the channel, and we can continue to push out content like this. Let's take a quick look at these two markets, then I'll talk about the ratio in a bit more detail. So this is gold. We saw this great run this year for gold in July, pushing out to about 1440 an ounce. And if we step the chart out and take a look at a weekly chart, you can see this is the highest it'd been in more than 6 years. So you'd expect the July reading for gold-silver ratio to be quite high. We'll take a look in a second. Let's have a quick catch up with silver. And here's the chart for silver. Here's July here, trading around about 1520. So it had recovered, but nowhere near as strongly as gold. So you'd expect that to have an impact on the ratio. Let's find out about this ratio now. Then I'll come back and look at things in a bit more detail. So let's get back to the ratio. What does it actually mean? Well, put simply, it's how many ounces of silver are required to buy 1 ounce of gold. It's a simple maths division. So as an example, if gold is trading at $1,500 an ounce and silver is trading at $15 an ounce, then this gold-silver ratio is 100. 1,500 divided by 15. It's as straightforward as that. Of course, gold and silver tend to move in sync. They're the same group, the precious metals group, and traders and investors will use the gold and silver ratio at extremes. If it's gone too far one way or the other, they'll look to maybe sell or buy gold to sell or buy silver. Let's have a look at some historical important levels for the gold-silver ratio. So on the upside, the largest extreme in recent decades has been up at 100. That was hit in February 1991. So you required 100 ounces of silver to buy just 1 ounce of gold. That was seen as an extreme reading. And that's why During the summer, we saw a lot of talk about this ratio because it was trading up at 93. So it was showing a pretty extreme reading based on what we've seen over pretty much the last 30 years or so. We'll take a look at it on the chart in a minute. So that was a pretty extreme number for the gold-silver ratio. So on the downside, some more recent lows, 66 in August 2016. And before that, we need to go back to April 2011, where it took just 33 ounces of silver to buy an ounce of gold. The historical average over the last 30 years has been around 60. So moves away from this sort of median middle ground may present opportunities to traders. At the moment, the ratio is trading around about 84. So still well above that historical 30-year average, but clearly off those highs that we saw in the summer. Let's take a look at the chart, that historical high of 93 back in the summer, and see how the markets reacted. So you'll remember that in July of this year, the gold-silver ratio hit 93. Traditionally, that would suggest that perhaps gold and silver are out of sync. Perhaps it's time to sell gold and buy some silver if you're using it that way. That did actually play out pretty well. You know, if we go back to July for silver and look on the chart, we did see the price of silver gain about $4 into early September. So a move in excess of 20%, and we saw that gold-silver ratio get more normalized back to where it's trading now, around about the 84 mark. So that's one way where it did work, where we saw the ratio hit an extreme. Gold maybe lagged a bit, but silver then caught up. So that's one way where the ratio trade did play out. So you can see the extreme reading there. When the ratio was pushing towards 100, we did see silver play catch up, and play catch up quite drastically. So selling out of gold and buying into silver would have worked back then. It's important, of course, to state that it doesn't work all the time, and these bands, they can change. You know, we could see the ratio push through 100, or even, you know, fall below 50, 40. It doesn't mean these bands are absolutely set in stone. But when people are talking about the gold-silver ratio, this is what they're talking about. And they will use these historical extremes to switch their exposure from one metal to another, perceiving one as expensive and one as cheap.
All right, so there you go. Now, it doesn't always work, does it? And look, I know some people that do trade the gold-silver ratio, and they've done quite well. They've done okay. Me personally, I don't trade the gold-silver ratio. I don't go back and forth between gold and silver. So selling gold and buying silver, and then selling silver and buying gold. I don't do that. I save in gold. Now, I've done videos about the history of gold and silver and the history of money, where silver has been money more times than gold. So I get the history of that. However, central banks own gold, and I want to own gold. And gold is less volatile, and it's a savings vehicle. So I look at gold as my savings vehicle. So when I get excess currency, I buy gold. So I save in gold. That's my savings, gold. Silver, on the other hand, I use wealth cycles. So I measure silver versus other assets. And I've done videos on that and shared my own experience about that. Now, there are times where I use the gold-silver ratio where I may buy more silver than I do gold, and vice versa. And so in March 2020, I've shared in videos where I actually, in the months leading up to that, I stopped buying any gold, and I was 100% buying silver. So I didn't sell my gold and move into silver, but I used the gold-silver ratio to help me define where I'm going to put more capital, into silver or into gold. So for me personally, I look at gold as savings. I've never sold any of my gold. If you know, and John Williams from Shadow Stats has done this, and gold over time has kept up exactly with his level of inflation, or CPI. And so that's how I look at gold. Silver moves in cycles and moves a lot more than gold. And so I look at profiting versus other assets. So I don't interchange between the gold and silver. I hope that makes some sense, but that's how I do it. I know others who do well trading the gold-silver ratio. And it's like anything. I am not a day trader. I'm not a swing trader. I don't use CFDs. I don't trade futures. I don't do any of that. I'm a fundamental value investor. I like to buy things that are undervalued. And look, the derivatives that I do use are options, and I've shared about that in this video. That predominantly I sell options, but I do buy and I do trade a couple of spreads. But that is the amount of trading I do. It's very limited. All right, so here we've got a gold silver ratio chart from 1792 to 2005 with yearly averages, and I just thought this would be a good video to share this chart. So you can see silver viewed as money at a ratio of about 15 to 1, with gold since coinage began with the Greeks 2,500 years ago. You got the Civil War, the political demonization of silver, 1870s to early 1900s, and it's interesting. I've been thinking about I should do a video on this because it's a very interesting. There's some good videos out there. So what I might do is just share those videos, and yeah, because that's a really interesting time for silver in the history of silver. Then we got World War I. Silver returns to money status. Paper viewed as money. The 20s stock bubble, and obviously the gold confiscation from FDR. World War II and continued use of silver in coinage. Then we have the Coinage Act of 1965 and ends all silver coinage. And the paper bill silver certificate redemption for silver bullion is ended in 68. And then you know what Nixon does on the 15th of August in 1971. And then the currency mayhem, last portion of 1968 to 1980, gold bull, silver viewed as money. Once again, I'm thinking I should do a video on this because I see so many people comment about the Hunt brothers and what went on. And there's some really awesome books that I've read on this, the history of what happened back then. And to be honest, most people don't have a clue. Most people just talk about what they heard from somebody else, and that's their view and on what actually happened. And it's actually quite a fascinating story. Knowing me, if I got into that, I'd be doing a super long video explaining that. And then we got paper viewed as money, 1980s, 90s, stock bubble, followed by the new gold bull. Will last portion of this see silver viewed as money again? That's the question. Where do we see the gold-silver ratio going? Keith Neumeier says that the gold-silver mining ratio is now 7 to 1, so it keeps getting lower and lower. But the actual paper gold-silver ratio keeps going up and up and up. So anyway, guys, what do you guys think? Let me know. Do you guys trade the gold-silver ratio? Do you use it like I do? Simply working out whether you buy more silver or buy more gold. Do you guys trade it? Do you use wealth cycles? Do you save in either silver or gold? Do you use it as a savings vehicle? Love to see your thoughts and opinions in the comments below. If you like this video, please give us that thumbs up, hit that like button. Really do appreciate it. Take care, everyone, and I'll see you all again on another episode of Finance Uncut.